we are starting, and I believe you will board with us all through. Basically, we are starting this segment to make sure that majority of the population are very conversant when it comes to matters to do with insurance, when it comes to matters to do with investment in shares, when it comes to matter to do with taxation, when it comes to matter to do with auditing, and all these aspects. We'll be here to guide you all through. And today, as we are starting this segment, we have one person who is going to grace this session of ours. He's an insurance consultant. He has been in this industry for more than 9 good years. Many a times, I know whenever you see an insurance guy approaching you, you're always like, now what is happening? You normally tend to feel them like, or rather look at them as just marketers, but in reality, they are always there to save our lives. And basically, in our segment today, I know we are going to learn a lot of things. And when you see this insurance person approaching you, you just be smiling because this person will be bringing a future on you. This person will be kind of trying as much as he or she can to make sure that your future is secured. Our guest today is Mr. Walter. I've introduced him before, and is an insurance consultant. So thank you so much, Mr. Walter, for agreeing to come to our segment today. And we are very humbled you're gracing our first segment. So maybe I'll wish you to maybe also introduce yourself to our viewers.
Sure.
Tell them about yourself, and I think we'll kick our show from there.
Yeah.
Welcome, Mr. Walter.
Thank you so much, Mr. Ringo. I'm honored to be here. I'm glad. My name is Mr. Walter Okinyi, and I'm a insurance financial consultant. And I'm happy to be here and to be able to tackle all the insurance questions that you've been having, and also to be able to share with you all the kind of benefits that insurance will be able to help you, to help the people around you, to help your family, and to ensure that from now onwards you can always like to hear about insurance and to have it more than yesterday. So welcome. And to this segment, I would want to appreciate Mr. Ringo here for giving me this opportunity to be able to share with you what insurance is all about. But just before I begin to be able to tell you more about insurance, there are some terms which you normally hear outside there, and you wonder what could this be. So for an example is you hear someone talking about premium, and you'd want to ask yourself, okay, what is this premium this person is talking about? Now, I want to be categorical and very clear that premium is that monthly contribution which someone would be paying for a specific future obligation.
Wow, wow, wow. Guys, and it's just starting, right? And it's just starting. So I know majority of you have also been asking what premium is, and these are some of the questions that also Mr. Walter will be guiding us all through this segment. So he has introduced himself, and he is an insurance consultant. And to start with Mr. Walter, of course you've answered the first question. I don't know how you've noted that was the first question that I wanted to ask, but a good thing you've answered it. So maybe to kickstart this segment, and our viewers, I want you to understand that it will be a freestyle segment whereby we'll just be asking random questions, and where you feel like will be required to understand more, of course he'll be here to guide and assist us. So Mr. Walter, I understand that you've been in this industry for quite some time.
Sure.
And probably I just want you to educate our viewers because, of course, you've mentioned the term premium, but I want you to elaborate more on the term premium whenever we are talking about matters to do with insurance.
Sure. Now, insurance terminologies do not differ. They vary from one segment to the other segment depending on the policies and the covers which has been taken. For example, when I talk about premium, premium is a monthly contribution. It could be a monthly, it could be half yearly, could be quarterly, or it could be annually. So one, you can't be able to talk about premium when you've not talked about sum assured. Now, in insurance, when we talk about sum assured is the end goal, that amount which you'll get upon the maturity of the period you've taken this cover. So, for example, in banking sector, you've put some amount of money which you want this money to stay with the bank for maybe 3 months or 1 year. So the amount which you are looking at getting at the end of that period is what we call the sum assured. So in insurance, the sum assured is also determined by the premium. So the premium is that actual contribution which you do for that specific amount which you're looking at the end of the period. So the period depend, be it on a 1 year, be it 5 years, be it 10 years, depending on what the aspect which the client will be able to select. So that is what the premium, the monthly contribution, that amount which you pay. Yes, sir.
Wow, 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 amazing. At least I know some of you whom you didn't know about aspect to do with sum assured and the premium. You can clearly be able to differentiate between that.
Definitely.
Now, as we continue with this segment, I understand that our viewers are based from different class. Our viewers are from different regions and beliefs. I'll just want Mr. Walter to tell us about some types of insurance that maybe we can take a cover on based on the environment that we are operating in. When you're talking about Kenya, as a Kenyan, probably.
Yes.
And given the fact that I'm in whichever class that I am,
Yes.
and I wish to know more about probably some covers that I can take and these insurance companies in Kenya.
Yes.
What are these types of insurance covers that maybe you can take?
Yes, sure. Definitely. Now, Mr. Ringo, what the covers varies from one to the other, but basically in Kenya, in most cases, people are looking at how will I be able to educate my children? How will I be able to invest towards buy that specific land which I want to get? How will I be able to buy that nice car which I've been dreaming to have? Or how can I be able to ensure that I get that nice own rentals which I can be able to have in the near future? So one specific cover, we normally have what we call an education cover. An education plan is an investment towards education of your child. You're looking that I have my small child, a young daughter, a young son, whom I would wish that when it comes to high school, it could be you're looking at the high school level. It could be you are looking at the junior high school or the senior high school or the university level, depending on our current CBC system. You are looking that I won't wish to see my child struggle when I'll really need this money most. Now, we as insurance personnel, we come and share with you that at this point, your son could be 2 years or 3 years, or your son could be in grade 1 or in grade 2. In the next few years, in the next 5 to 4 years, if, for example, a child who is in PP2, in the next 6 years, you know this child will have finished grade 6. So what next from grade 6? You'll need to pay school fee. The government has been so lenient with us and has been providing an opportunity for us to be able to take our children to the public schools. But is that good enough? Will you still be relying on the government to be able to pay for your child education even in the junior high school level, in the senior high school level, all the way to the university? That is a question which you have to answer on yourself. And you also have other bills to pay. So for you to be able to reduce such kind of a school fee, going from loan after the other, or you've acquired a nice, beautiful asset, which at the time when your child will be joining to those higher levels, you'll be you'll want to sell this asset so that you can be able to reduce your leverage of school fee. So we here tell you that instead of doing that, buy the asset, use that asset to help you in your investment plans, as opposed to be selling it at that particular time. So now make an arrangement to ensure that your son or your daughter have a consistent monthly saving plan towards his education, so that by the time this child is reaching the junior high school, you already have money at your disposal with as minimum as 2,000 Kenya shillings. Can you imagine? And you have over 100,000. That is just speaking on the lower minimum of 2,000, and you're looking at 100,000 each and every year for the junior levels. So that means, therefore, that if you can be able to increase your level to what you need, we tailor make it for you, so that by the time your child is going to those higher levels, be it an international school, you'll be comfortable that your child has done the best and you'll provide the best for this child. So we plan with you to have an education plan that your child will be able to go to those higher level without you straining. And that is what insurance is all about when it comes to an education plan. Currently, look at how just the other day, the schools were students were transitioning from high school, from primary to the high school, and you find that that needy child who has passed so well, 430 marks, 410 marks, 400 marks, and the parents are not able to take this child to the high school. And this has to be flaunted on social media for well-wishers to come. And currently, maybe someone is working and has a good income and has not made that particular plan so that the child will be able to go to high school without straining. What will happen? The good thing is that we are here to be able to advise your viewers so that you can take up these opportunities as soon as now. You may say that, yes, I have the plots of land, I have house rents which my son will be able to have a better education. But what about an eventuality happening along the way?
Wow,
And that is where now insurance comes in, Mr. Ringo.
Amazing, amazing. Actually, Mr. Walter is answering more questions that I've even not asked, though it was my intention to ask these questions, which is very, very amazing. So, Mr. Walter, maybe if I may ask, you've talked about, you've mentioned several policies which include education, you've mentioned medical, you've talked of investment, but you've really concentrated so much on education policy. And because we don't have specific questions, we are dealing with them, we are kind of handling it on a random perspective.
Sure.
Allow us maybe to go deep into this education policy.
Okay.
You've really talked about it, which also have learned some things. So maybe if I may ask, like, do we have different types of education policy that probably me as a citizen I would wish to take a cover on, or education policy is just education policy?
No, that's a very good question. When we talk about education policy, we are looking at a general policy meant to take care of this child when this child will need this money most. In most cases, we can't be able to categorically say that this is the channel through which you can basically be able to save for. But the best idea for you to have a best education plan is to know the current age of the child, so that we plan with you and know that at this specific time, my child will need the school fee. It could be that you are looking at in the next 4 or 5 years, my child will be joining grade 4. And you find in your heart that it is grade 4 that will be so high, expensive for you. So begin to save towards it now.
Oh,
it could be that you are looking.
Maybe just to cut you short, I'm very sorry.
Yes.
Just on the same, before I forget about this question, is there a minimum age that I can register my child on education policy? Do you have, say, like, if my child is below 2 years, you can't register. If my child is, say, below 6 months, I can't register my child to this policy? So is there a minimum age where you normally tend to say that it is only after this age is when you can register a child to an
Okay.
education policy?
A very good question, and I'll be able to answer that question very direct. When it comes to an education plan, we don't have a minimum age for the child to be able to begin to take an education policy. We normally say that as soon as you as a parent, you've realized that the mom has conceived, you need to begin planning for a future of this child as soon as that good news has been relayed to you by the mom that this has taken place. Now it is you to begin as soon as there for you to be able to reduce your school fee leverage by beginning to plan now, because in insurance, the longer the term, the smaller the premium. The longer the term, the smaller the premium, and the bigger the sum assured. What do I mean? That the earlier the better. If you begin when the child is 0, the better. Because an example, let me give you an example of maybe 5,000. You are contributing 5,000 per month. And in the next 7 years, this child will be joining, or in the next 12 years, this child will be joining junior high school. It means you shall have saved for the last 11 years. So
5,000 per month.
5,000
years.
years.
Wow,
Now
that
you
was
find
big
that
sum.
you can be having $1 million every single year for the next 3 years. That means $1 million, $1 million, $1 million. For us below us, 5,000 Kenya shillings. Why? Because the period is longer. So the earlier the better, you'll be able to contribute less and get more. And that is what insurance is all about.
Amazing, amazing. Guys, I believe you listened to Mr. Walter, and this just maybe an advice for you. More so for wanaume. If you've realized that you've given mama something, just make sure that you've started maybe saving for the child, right? As they normally tend to say, mtoto anakuja na sahani yake. Is that really the case? I know you're going to answer that question by yourselves. So thank you so much, Mr. Walter. We are learning a lot when it comes to this. And maybe I know majority of the population, probably because of lack of knowledge or ignorance,
Yeah.
they normally tend to fear so much because of probably they have seen some stories online
Sure.
regarding like if I invest say like in this insurance firm and probably it closes and I probably had contributed for like more than 5 years. So what will happen to this citizen? What will happen to this poor person whom he has been contributing, say, to an insurance firm
Yes.
for a period of 5 years, and unfortunately, without even notice, this insurance firm maybe closes down.
Sure.
So what will this, or rather, how will this person be assisted in such a case?
Yes. Thank you so much for that question. This is a question that has given many people a challenge. And that's why quite a number of, in fact, insurance penetration currently is at 3%. Can you imagine? In the whole
3%.
Kenya, 3%.
Meaning that out of say like 1 million, only like say only like 30,000 have registered.
Insurance. Definitely.
That is very low.
Yes. So the reason behind this is because of such issues which are coming up and the question which you've just asked. So to be precise on this, one thing is that yes, insurance come and it could go down as well. But remember currently, in the past, insurances were not regulated. Currently, we have a regulatory authority body, and this body is called IRA, Insurance Regulatory Authority. Insurance Regulatory Authority ensures that insurances do not exploit you as a member. And it promotes insurances so that insurances can reach out to many people, and also to be able to ensure that the premiums are paid or the sum assureds are paid. So what happens in an event of the insurance going down? One thing which you as the loser or you as the person who was contributing, you launch your claim through the Insurance Regulatory Authority.
Wow. So maybe just to be very clear, Mr. Walter,
Yes.
you're saying in the event that maybe I was contributing to a certain insurance firm, right?
Yes.
And God forbid, as maybe the business environment is very hostile, this business closes down.
Yes.
The Insurance Regulatory Authority can come in and save my case.
Yes.
Amazing.
Insurance Regulatory Authority will take up your case and ensure that you get your money plus all the interest accrued as at the time when that farm went down. Remember, when you are doing that, your monthly contribution, that premium which you are paying, there is a small portion that normally goes to the Insurance Regulatory Authority. And that that portion that is going to the Insurance Regulatory Authority is to ensure that it protects you as the contributor.
Amazing.
All right.
Amazing.
Yes.
So basically, this Insurance Regulatory Authority, it covers any form of insurance that I'm taking, regardless if it is education, if it is investment, if it is health. It covers all form of policy that I'm taking, right?
Yes, it is a regulatory body that covers all insurances and all the activities that insurance firm undertakes. So it covers, it ensures that it covers everything for your help.
That's amazing, guys. I know we are really learning a lot about aspects to do with insurance. Now, come back to I know it's also one of the contentious issues for majority of our viewers and also probably general citizens at large. I know this is not only in Kenya but all over, right? Assuming I've started to contribute, right?
Yes.
Then, of course, many events can come into place. A good example is what happened in 2020, the Black Swine event, which was COVID-19, or maybe aspect of what is happening now in Ukraine in relation to war between Russia and Ukraine. You'll find that some of these events might affect my operations. Or if I was employed, you'll find that maybe I'm going to be retrenched, or rather if I was operating a business, probably I'm going to close down. And mark you me, I'd already started contributing, right?
Sure.
You'll find that such an event will block my income,
Definitely.
right? That event
Definitely.
will block my income, and blocking my income, that is to say, I may fail to contribute as I used to contribute.
Yeah.
Or other case, maybe it will be like maybe I've gotten an accident and I'm physically impaired, or I'm affected in a manner that I can't continue to contribute. So in this event, I'm having two questions. The first question would be, what if I have delayed to contribute as per what you had agreed? What will be my fate? That's the first question. The other question would be, if I want to opt out, knowing very well that probably I won't be able to continue contributing. Again, on the same case, what will be my fate? So kindly I wish you to maybe elaborate for us. I know this is one question that majority of you have been asking before even I decide to join an insurance firm, or rather to join to take a certain cover. These are some of eventualities that we might tend to look at. So can you kindly elaborate and educate us about such cases, please?
Okay. Thank you so much for that question. One thing is that once you've enrolled to take an insurance policy, especially if it is an investment policy or an education policy, we have what we call terms and conditions of each and every policy taken. So number one, in an event of a job loss, or in an event like in that case where the COVID came in and many people lost jobs, businesses were closed down, and this person was contributing. So you ask what happens. Number one, in an event of a job loss, and you had been contributing, what do we say? That we have what we call a surrender value. a surrender value is a period through which your money can be given back to you. And in most cases, you'll find that surrender value is normally after 36 months. That is, you can basically be able to request for your money and you be given back your money after 36 months. Now, in that case, insurance will be able to give you your contribution less management fee. And that management fee could either, depending on one insurance after the other, but it's normally a 2% management fee which shall be taken. So you won't get the actual amount which you had contributed, but you'll be able to get back your money if you've surpassed the surrender period, which is 36 months. Now, what happens if you've lost your job maybe after 6 months or after 1 month and you want back your money? I wish to categorically tell you that in that case, therefore, insurances normally do not return any single coin if it is below the surrender period. Why? Remember, insurance is not a bank.
Correct.
Insurances have engaged into other businesses for you to be able to gain an interest, and insurance also be able to gain something, so that at the end we both gain. You as a person, an investor, you gain. Insurances as a company also does what?
Or win-win situation, right?
Yes, so it is a win-win situation. So that is why we put a surrender period, such that kindly be with us for at least minimum period of 36 months, so that we can also be able to earn value for the investment. But we are not saying that your money is lost. We tell you that when you get a job, maybe, or your situation now comes back, you can basically be able to come back and pick from where you left and proceed on with the premium which you are contributing until maturity, and then upon maturity have all your entire sum assured plus all the accrued benefits which you had initially. So that is what happens in an event of a job loss, and also in an event that you want to get your money back. All right. Now, you talked another one about in an event of unfortunate event happens, and we say maybe
you're physically impaired.
you are physically impaired, you are physically challenged, or you are permanent and totally disabled. You can't be able to work anymore. What happens there? And remember, it could be that you took an education plan for the benefit of your child, and maybe it is only 3 months or 6 months, and this policy was to be for a 10-year plan or a 7-year plan.
Correct.
What will be able to happen? Yes, that's a very good question which people ask, and they've never got the right answer. Now this is the right answer for this.
I believe you guys, you are listening, and kindly listen very careful to Mr. Walter.
Indeed. So this is what happens in an event of an unfortunate event like that. It was not your wish. It wasn't your wish for you to get involved in an accident and you're permanently and totally disabled. In that case, therefore, insurance comes to your aid. Number one, it gives you 50% of the sum assured, of the amount you are looking at in 10 years' time.
Regardless of I've gotten this maybe unfortunate event, regardless of the time that I've gotten this unfortunate event.
Regardless of the time when the event happens, as long as the policy is active when this when the accident happens, even if it is 1 month, maybe you've taken in the first month, all right, and then the beginning of the second month, unfortunate event happens, and assuming you are the amount which you are looking at in 10 years time was 1 million. So in this case, therefore, kindly note this, in this case, therefore, insurance will be able to give you 50% of the 1 million to be able to help you now.
Is that really for a fact?
That is for a fact. Kindly note it very clearly. That is why you need to take an insurance, because the life is very unpredictable. Life is very unpredictable. So in that case, therefore, one, insurance gives you 50% of the sum assured immediately to be able to help you during this time, because you have a family to feed, you have yourself to get treatment, right? And these children look up to you. Number two of what happens is that the monthly contribution, the premium which you're contributing, in that case stops. We don't go to your next of kin to be able to continue making the premium. We don't go to your spouse to be able to tell your spouse that your husband was doing this now, that he cannot be able to, and you are employed. Why don't you continue? No, insurance takes up this responsibility on your behalf and makes that contribution until maturity. And upon maturity, we'll be able to give the whole amount as stated without subtracting the half, the 50% which we had given earlier. So that is why insurance is very different from the SACCO and from the banks as well. So please ensure that you get these covers, and that's why we want this penetration of insurance to go high and above the percentage that it is there. So I believe I've answered that question very vividly.
Very correct. And I think these are information that majority of you did know about that. I'm very sure that majority of you didn't know about that. Now I've come to realize that the context of our insurance is so wide, right?
Very.
So I know we might not complete this maybe about all the questions in relation to insurance in our today's segment. But I know my viewers won't forgive me if we end this segment for today without asking this question. What if, assuming, because we've talked more of our education policy, right? What if in the event that probably, God forbid, right, a person maybe passes on?
Yes.
And I was contributing to my child. In such an event, what will happen?
Definitely.
Because we've only talked of when I've lost a job or when I've decided to maybe reclaim back my money. But this another event that maybe, God forbid, as much as everyone is going on the same road, maybe a person has passes on. So in this event, what will happen to the amount that I'd already contributed? And I was contributing this without maybe informing my partner.
A very good question. So thank you so much for that question. Now, this is what happens in an event of an eventuality happening and death comes in. Now, death can be of a natural death or it can be of an accidental death. Accidental death is where you woke up, you're very okay, and you are going to work. An unfortunate event happens, you get someone and knocks you down, and you are no more.
Correct.
That's a very unaccidental. So in that case, therefore, and you are having the insurance policy. So in that case, therefore, insurance do not give 50%. Insurance gives 100% of the sum assured. The amount, if you're looking at 1 million in 10 years' time, and maybe this has happened after the 3rd month or the 6th month, in that case, therefore, insurance gives 100% of the sum assured to help the family during this time that the death has occurred as a result of an accident. And then the normal monthly contribution, which we call them premium, the normal monthly contribution, insurance takes up that responsibility until maturity. And upon maturity, that is when the child shall be going for higher learning institutions. Insurance will still be able to give that same sum assured, the amount which you're looking at in return, to the next of kin to be able to ensure that this child proceed with his schooling. But what happens in an event that you didn't inform your spouse?
Correct.
Now, when taking up an insurance, before even you sign up for this is what we normally ask you. Whom would you put in place as your next of kin? So upon registration, kindly guys be careful on whom you trust with your life. Therefore, this should be someone whom you trust. This is someone whom you know that in an event of an eventuality happening to me, my children will still have a better life. So if you didn't inform your spouse, there must be someone whom you placed as a next of kin. It could be your parent, your mother, your father, your brother, your sister. That is the person whom will be able to, who will be entitled to get the money and who will be entitled to help your children. So that is what happens. You have to specify while you are still there who will be the next of kin and the beneficiaries. Remember, the next of kin is to administer that the beneficiaries have gotten the right portion. So advice to everyone is that kindly ensure that you put someone whom you trust to be able to look after your investment aspects.
Amazing. I know. The topics. This topic is very wide, and the majority of us will be very eager to know more about this. But because of our time, in another time, whereby he'll be explaining to us more about insurance. But before we go, maybe one person there or two people, all of you would wish to know more about insurance, and probably after listening to Mr. Walter, you will wish to maybe take a cover. So in this case, I'll wish Mr. Walter to give his contact, so that in the event that you feel you want to get more information about insurance and be advised on the best possible policy that you can take, as well as how to go about it, Mr. Walter will give us his number. Kindly put it down, and immediately after this, you can always engage him for more questions which we've not asked in this segment. Kindly, Mr. Walter, you can give our viewers your number, which they can contact you at any given point in time.
All right. Thank you very much. Just before I finish, allow me just to mention just three things, then I give up my number. I've just gave a small segment of insurance, that is an education plan, but I also do other aspect whereby you are looking at a short-term investment plan of a 2 weeks plan, 1 month plan. We call it a money market. A money market fund is a fund where you can be able to deposit as low as 1,000 Kenya shillings, and you have an interest of 9% per annum compounded on a daily basis. The other aspect which I would be able to run over is about a medical cover. We also have medical covers. Did you know that with as low as 9,000 Kenya shillings, you have a medical cover up to 300,000 inpatient? So that is a segment which you need not to miss. And also from the contact that I'll be able to share with you, you can basically be able to contact me for all of your both inpatient and outpatient medical covers to be able to help you. You have got group of WhatsApps. How many WhatsApp groups have you been invited for in an event of an eventuality has happened? How many groups have you been invited so that you can be able to contribute one after the other in an event of a demise of a family member or a friend or a company member? We have what we call group last expense cover. It doesn't have to be a group. It can even be able to be a chama of 10 people or 12 people. And you are looking at, in an event of an eventuality happening, it doesn't come when you have money. Sometimes it comes when you don't have money. So what happens? We have got covers that can basically be able to help you reduce that leverage with as low as 100 Kenya shillings. And you have a group last expense cover. And finally, we have got what we call a chama. Group chama is where you can be able to contribute as low as 1,000 Kenya shillings as well.
Amazing.
For an investment as a chama, and you are all set. And remember, from that group chama as well, we provide you with a free life cover of 50,000. How amazing is that, mister? That is what I would be able to take care of you some other time. And when you get this contact, which I'm just about to tell you about, you can be able to reach me out, and I'll be at your service at any given time to be able to help you move out from that level which you have. So my number is 0729 233 774. 0729 233 774. So that is my number. My name is Mr. Walter Okinyi. I'll be able to be at your service for any insurance consultation. Thank you so much, and for the program as well.
Thank you so much, Mr. Walter, for coming. I believe all of us, we've learned a lot. As much as we know very well that time was very limited. Of course, you're going to invite Mr. Walter one more time in the near future, where he's going to give us more details about the types of insurance that he has mentioned to us. Guys, I want to take this opportunity to thank you so much for being with us since we've started this till the end. And I really appreciate that. We'll be having more for this segment whereby he has talked of also a very important thing about aspect of maybe investments, right? Short-term investments. That one is also very key whenever we're talking of money markets. We'll be having more of these segments. When it comes to taxation, that is area to do with tax. Whenever we're talking about circles. So this is just the beginning, and I believe you'll always be with us. So kindly, I'll also wish you guys to subscribe if you haven't subscribed, so that you cannot miss more of these life-changing lessons. To that point, thank you so much. Mr. Walter, thank you so much, and we hope to see you next time.
Thank you very, very much. I appreciate. See you some other time. See you. Thank you.
Thank you much, guys. Have a nice time, and let us link.